morning, everyone. I thought I'd start with the masks on because that's the situation we're in Sydney today. Everyone's wearing masks in the workplace. I'm able to take mine off because the producer and director are behind a glass wall, so everyone is safe. It's certainly a reminder that we do really face continued economic risk from the COVID situation. Of particular worrying aspect of all of this is the new wave, as you know, of the Delta variant. But what a lot of people are not focusing on is that in the nations with the highest vaccination rates, they are experiencing a new surge of the Delta variant and increased hospitalizations and intensive care situations. So, for instance, in Israel, with the highest vaccination in the world, they are experiencing a fresh wave of the Delta variant. In the UK, with very high vaccination rates, where the population has been very keen to get vaccinated, they are now seeing their highest caseloads since February. In the US, in the state of Missouri, where they haven't been as keen to vaccinate perhaps as in other states, but still it's above 40% vaccination of the population, they are seeing their hospitals close to critical levels of medical care and intensive care. So this variant in Russia again, also high vaccination rates, another surge of the virus. What if? This is a big what if, and I think it's so important in terms of our portfolio holdings and our investment approach and aspect at the moment. What if, as I've suggested all along actually, vaccinations are not a silver bullet. They are extremely helpful and they are effective to a reasonable degree, but they're not a silver bullet. They are not going to stop this situation deteriorating in ever-increasing waves. And by that I mean, what if we're about to have a resurgent Delta global crisis that could perhaps be even worse than the first wave of COVID? And what would that do to economies only in the short term? Because again, we'd have lockdowns, we'd find ways to out of those situations. But what if we do go into lockdown, for instance, in Sydney, in New Zealand? What if the UK were to have to go back into lockdown? What if Israel were to go into a lockdown situation again? The global economy is not safe and secure, and I think a lot of the projections of a lot of commentators and economists that it's all over and we're going to have a global economy and individual economies that are even far superior to what they were before the pandemic, that is really science fiction stuff. The on-the-ground reality is far more complex than these simplistic approaches of just wanting to believe what we wish was the case, that we were through this and it was all behind us. Now, we are getting through it, but we're not through it, I guess, is my point. And, you know, the markets, financial markets, price in the future. There's no doubt about that, but we've priced in a future that was far too rosy, even in a normal situation, let alone the supply chain disruption, the ongoing inflationary pressures that are going to be far more persistent than Jerome Powell thinks. He's got it wrong, and I'm not alone in thinking that. And that means the Fed will be late in addressing inflation, which means inflation can really get out of control here. Inflation, I talked about inflation in 2009 as being the tiger that had been turned into the domestic kitten. Well, the domestic kitten is now a rather large cat and it's risking turning back into a tiger. So inflation is a real risk going forward. So the world economy is facing both a resurgence risk of COVID pandemic type crisis situation, which many countries in the world are still experiencing to severe degrees, and a second wave of inflation as well at the same time. I think we need to be aware of these two waves coming at us at the same time, these two tsunamis coming at us at the same time, and you know, we cannot just be buying stocks blindly at this point and adding to our investment portfolios. We do need to have active hedging strategies in place and pre-planned, so you don't have to think about things in real time. You've already thought about what your hedging strategy would be if one of these two situations I just highlighted really did develop into mega tsunamis. What would be your hedging strategy then? Plan it in advance. That's the only way you can succeed in markets, is to plan for scenarios that aren't currently occurring, but what if they were to occur? So when they occur in real time, your reactions are logical, not emotional, and it does give you a great advantage. So for the moment, I would really be considering those two potential tsunamis coming towards us. And when we look at the actual stock price action in the US, everyone wants to believe the good stuff, so everyone's focusing on the NASDAQ, moving higher, making another record high, really driven on the day though by Tesla starting to break up out of its low consolidation phase, which was after a big correction. So Tesla is just bouncing from lows after a big correction, and that bounce could be quite significant. If you were to see fresh highs in Tesla in the following trading session today, I think that would be a fresh buy signal for Tesla over the medium to long term. However, that drove the NASDAQ up, and for the broader market indices like the Dow Jones and the S&P 500, they were not as impressive. And what I think is happening is that a lot of the major funds, global funds around the world, Europe, the United States, Asia, are actually offloading some of their portfolios because they're taking fantastic profits at these levels, and they understand that the inflation problem is not going to be as transitory and a smaller issue as Jerome Powell thinks it will be. So they are definitely offloading some of their portfolios. This is why we're seeing broad stock indices, most stocks actually seeing profit taking, being sold down a little bit, but a few of the socially focused on sort of meme stocks, which Tesla has virtually become, doing well. So I think there is an undercurrent there in the price action that stocks are looking vulnerable at these very, very high levels, and that the market has yet to price in any risk at all of a return of a COVID crisis similar to what we saw in 2020, but that could be something that does approach us. And also markets have attempted to only just start to price in that inflationary risk. So whilst some indices like the NASDAQ are looking good on the day, I would suggest let's get involved in more complex, more active hedging strategies, which will serve us well should there be a market downturn. Thank you very much, and this is Clifford Bennett, Chief Economist at ACY Securities. Thank you.